Everyone expected Kyiv to fall within days of the February 2022 invasion. Instead, after early gains near the capital, Ukrainian counterattacks that autumn pushed Moscow's forces back and flipped momentum entirely. Since roughly mid-2022, the front line has barely shifted. Years of offensives on both sides, and the map looks almost the same as it did at the start. The standard explanation is straightforward. Ukraine's army got sharper, Western arms shipments closed the capability gap, and the Kremlin's military underperformed relative to expectations. That's all true. But it may be missing a bigger point. What if this stalemate isn't a failure, but closer to the intended outcome? What if an outright victory would actually be worse for Putin's circle than the fighting simply continuing? Unlike Western governments, which operate through formal ministries and civil service departments, the Russian economy is effectively parceled out among a small group of oligarchs who each control a personal fiefdom of industry, working alongside Putin. These aren't ordinary billionaires. Take Konstantin Malofeev, an investment financier who, on his own initiative in 2014, financed and organized an armed unit that seized the city of Slovyansk, taking government buildings and fighting Ukrainian troops sent to reclaim it. This class of tycoons traces back to the chaotic privatization of the 1990 seconds, when roughly 15,000 state-owned enterprises, accounting for two-thirds of Soviet industrial output, were open to private ownership. The government distributed vouchers to ordinary citizens. Cash-strapped in a collapsing economy, most people sold theirs cheaply to a small circle of connected bankers, who became today's oligarch class and now hold over a third of national wealth. Rather than reinvesting in factories or infrastructure, many of them poured their new fortunes into luxury purchases, like yachts and European football clubs. And the broader economy grew at less than half the pace of neighbors such as Poland. Oil became the exception. Prices climbed from about $26 a barrel in 2000 to $92 by 2008, and crude eventually accounted for a fifth of GDP and half of state revenue. Billionaires multiplied from almost none to 87 by 2008, second only to the US. But instead of using that windfall to diversify, the Kremlin leaned harder into dependency on a single resource. When prices crashed in 2014, average incomes fell by nearly half, and supermarkets rationed buckwheat amid panic buying, a shortage scare not seen since the USSR's collapse. The lesson stuck. With a fifth of GDP tied to crude, its global price is existential. By 2021, the setup was almost too convenient. Europe had become deeply reliant on Russian energy, with over 45% of its oil imports coming from Russia, while prices sat near a decade low around $40 a barrel. What Moscow needed was a shock big enough to send prices soaring. And history, including America's own Middle East conflicts, had already shown that armed conflict does exactly that. When Europe cut Russian gas imports by roughly 80% following the invasion, competition for remaining supply sent Brent crude from about $95 to near $140 a barrel within weeks, an 8-year high. The sanctions were designed to deny the Kremlin that upside. They didn't work. Because crude trades globally, cargoes once bound for Europe simply rerouted to India, while India increased its own exports to Europe to fill the gap. 4 years on, Russia is shipping more oil by volume than before the invasion. At higher prices, a clear net gain. Average Russian incomes have actually risen about 15% since fighting began, outpacing income growth in Germany and the UK over the same stretch. Meanwhile, the state used the conflict as cover to consolidate ownership. Foreign firms that tried to exit had their sales blocked and were placed under state management instead, handing the Kremlin profitable businesses at essentially no cost. Domestic industry wasn't spared either. The Chelyabinsk electrometallurgical plant, a key ferroalloy producer feeding Russia's steel and munitions supply chain, was renationalized in 2024 after prosecutors retroactively declared its 1,990 seconds privatization illegal, ending owner Yuri Antopov's 3-decade hold on it. Similar seizures have swept oil and gas, infrastructure, defense, chemicals, and agriculture, a reversal of the 1,990-second sell-off, now being called an era of deprivatization. Funds from the oil boom then flowed into these newly state-controlled firms to churn out weapons, an approach economists label military Keynesianism. Government spending on arms manufacturing creates jobs. Those wages get spent and respent throughout the economy, and the overall stimulus effect outweighs the initial outlay. Between 2022 and 2024, more than 10% of GDP was injected as fiscal stimulus, largely through the defense industrial sector. And, by conventional growth metrics, the country is currently outperforming most of Western Europe. None of this erases the real costs. The ruble lost about 40% of its value in the opening weeks. Inflation spiked past 17%, interest rates were more than doubled in an emergency move, and by 2024, roughly a third of citizens reported struggling to afford groceries. But the system isn't optimized for ordinary living standards. It's optimized for the interests of the inner circle. And by that measure, the wartime economy has largely delivered. Putin hasn't framed this as a territorial or NATO dispute. He's cast it as a civilizational struggle, describing the West as seeking to erase Russian faith, family structures, and tradition, and denouncing Western social liberalism in explicitly religious terms. Patriarch Kirill, head of the Russian Orthodox Church and a close ally of the president, has echoed this, calling the fighting spiritual resistance to Western social values. It's worked as intended. Approval for Putin jumped from roughly 60% to over 80% at the invasion's outset, and has stayed elevated, a textbook case of the rally around the flag effect, where an external threat suppresses internal dissent, regardless of how a conflict is actually going. The Kremlin tested this dynamic before. In February 2014, with approval at a decade low amid economic stagnation and corruption scandals, the annexation of Crimea sent it from the low 60 seconds back above 80%, almost overnight. This is precisely why an actual victory would be dangerous for the regime. Without an external threat to unite against, that approval boost evaporates, and the underlying economic fragility, the kind that produces genuine unrest, becomes exposed again. Officials have already seen how quickly that can spiral. In 2011, evidence of ballot stuffing in parliamentary elections triggered the largest protest wave of Putin's tenure, spreading to nearly 100 cities before being suppressed through arrests and force. The lesson for the Kremlin: a unified, angry public is the one thing that can genuinely threaten its grip. There's also a demobilization risk with historical precedent. When roughly 1 million Soviet troops returned from Afghanistan in 1989 with no clear path back into civilian life, many became the backbone of the organized crime networks that plagued the country through the 1,990 seconds, a problem that took decades to unwind. This conflict could produce a far larger version of that same crisis. Up to 640,000 troops have been deployed at peak strength, more than 5 times the Soviet maximum in Afghanistan. And a substantial share have been recruited directly out of prisons through outfits like Wagner and, subsequently, the regular army, creating a direct pipeline between combat service and criminal networks. Courts have reportedly been directed to treat veterans leniently in order to keep that recruitment channel open, which makes reintegrating hundreds of thousands of these men, many styled publicly as heroes, an unusually difficult problem to solve. Keeping them occupied at the front may genuinely be the safer option for those in power. Territorial gains have been essentially flat for years, and Moscow has consistently avoided finalizing a peace deal. A US-brokered framework in late 2025 into 2026, reportedly around 90% complete and including European-backed security guarantees for Ukraine, collapsed when Russia withdrew at the last stage. This happened despite direct engagement from Trump, including an August 2025 meeting with Putin in Alaska, and a refusal to even meet with Zelensky. Beyond the battlefield, the conflict appears to serve a longer strategic purpose, cementing what some Western analysts call an axis of upheaval, made up of Russia, China, Iran, and North Korea. These countries share an interest in loosening American-led global influence, but prior to 2022, their cooperation was largely rhetorical, built on trade statements and shallow agreements that carried little weight, since promises made in peacetime cost nothing to break. The invasion changed that calculus by forcing irreversible commitments. North Korea deployed its own soldiers to fight on European soil, a step that can't be walked back. Chinese firms have been sanctioned for supplying components to the war effort, burning bridges with the West in the process. In effect, the conflict has pushed these partners into binding obligations rather than easily abandoned promises, laying groundwork for an alternative to the Western-led order. And the longer it continues, the more time that alternative structure has to solidify, which may be the clearest answer yet for why there's no urgency in Moscow to bring it to a close.